No, we haven't had that price in 3 years, and it's getting very, very close to new all-time highs, of course. And of course, when it breaks through new all-time highs, that would trigger a lot of buy stop orders. People will pile in an aggressive way. You'll see it pop to 100,000. This will trigger institutional fear of missing out, or FOMO, on a major scale. We're seeing that now happen in the banks, the institutions, the hedge funds. So they're going to come in with these huge orders. I saw somebody noticing that there was a huge multi-billion-dollar trade just in the last 48 hours, and they paid something like $1.25 in fees, and it's the magic of Bitcoin. So this is now getting into, I would say, the second inning of this leg of the big bull market, this particular phase of the bull market.
With Bitcoin making new all-time highs, many people are piling back into the space and are aggressively buying up Bitcoin. This surge will propel its price to well over $100,000. This bullish forecast comes from none other than Max Keiser, the ultimate Bitcoin OG. Recently, Max revealed that the US dollar might be the last currency to lose ground to Bitcoin. This means that even though Bitcoin's value is rising, it might be a while before it overtakes the US dollar completely. Max also emphasized the importance of educating yourself about Bitcoin. He believes that the more you learn about it, the more confident you'll become in its potential. When it comes to Bitcoin's price, Max sees a clear trajectory upwards. He believes that its value will continue to rise, especially as more people adopt it and its utility grows. Make sure to stick around to the end of the video, where both Max Keiser and Stacy Herbert share their updated price predictions for Bitcoin over the next bull run. But before that, today's video is brought to you by Crypto.com. If you still haven't got a crypto card yet, you're living in the past. With traditional cards, you have to pay annual fees, they take percentages, and some banks charge you at every transaction. That's not the case with the Crypto.com Visa card. With a Crypto.com Visa card, you can spend your crypto anywhere you want, and the benefits are insane. With your Crypto.com Visa card, you can earn up to 5% back in Crow rewards on every transaction, enjoy 100% cashback on Spotify, Netflix, and Amazon as a new customer for the first 6 months, get complimentary access to airport lounges and elevate your travel experience, and flaunt your style with the sleek and stylish metal card. Now, Crypto.com is currently giving out a $25 new user sign-up bonus for Jamie Tree viewers. Here's how to get your $25 bonus and start earning up to 5% back. First off, download the Crypto.com app by clicking the first link in the description or scanning the QR code on screen now. Second, sign up using our referral code nutty for your instant $25 bonus. Thirdly, once you've signed up and have been approved, here's how to get your Crypto.com card. Tap the card tab at the right of the navigation panel, select your preferred card tier based on the required cardholder Crow staking or lockup amount. I personally have a Ruby Red card. The only requirement is you lock up 400 USD of Crow for 180 days, which is then unlocked. Then accept terms and conditions. And you'll have to have sufficient Crow in your crypto wallet for the 180-day stake or lockup. Finally, submit your delivery address. Then you'll get your Crypto.com Visa card, start making transactions, earning rewards, and enjoying the perks. So to claim your $25 bonus and earn up to 5% back on all your spending, click that first link in the description to get started with Crypto.com today. Now, back to the video.
I like you, US dollar. I'm going to kill you last. All right, so the US dollar will be the last to succumb ultimately to the Bitcoin. But you've already got dozens of currencies are falling to Bitcoin as it makes new all-time highs in various currencies around the world. And so this is the fun bit. And also, it's a matter of conviction. So this is a problem every investor has. I think it was Peter Lynch, famous money manager over there at Fidelity Magellan Fund, who in one of his books, he talks about the fact that most people do more researching a refrigerator to buy than they do researching the stocks that they're going to buy. And people tend to buy stocks without doing a lot of research. They hear somebody talk about it and they buy some. And so they don't really know why they're buying it. They like when the price goes up. But when the price goes down, they're like, you know what? I have no idea why I own this thing. I'm going to sell it. Because they never took the time to learn about it and get educated by it. So they lack conviction. If you spend the time learning about it and educate yourself about Bitcoin and your conviction goes up, then every time the price goes down, you see it as a buying opportunity. You see it as something that's valuable, that's on sale. another interesting observation, it could have been Peter Lynch as well, who said that the stock market is a very strange place because it's the only market in the world where when things go on sale, people run away from the price. Usually if you're at Walmart or some big store and something's on sale, 30% off, you're like, oh, great, I'm going to stock up right now. But this is the opposite in the stock market. So this is not unexpected, what you're describing there. And the best way to avoid dumping at the inappropriate time and to start stacking is to simply increase your conviction, which comes through education. And fortunately, there's so much information out there that it's not hard to put 10, 20, 30, 40, 50, 60, 100 hours or 1,000 hours into this and get your conviction up high. Paul Tudor Jones, I remember when he got into it, he's a legendary trader, and he went on CNBC and talked about it and the impact of the core owners and buyers of Bitcoin, the network effect. And Michael Saylor talked about this as well, the cyber hornets, as he calls them, and the hodlers. And there's a core kind of floor to Bitcoin. During the era of the central bank supremacy, which is from 1980 to 1922, so a 42-year reign of central banks in the world, there was something called the Greenspan put, which is that every time markets go down, the central banker, this was started by Alan Greenspan, would lower interest rates and bail out Wall Street. So they kind of like took a new direction for the Fed. The Fed, that wasn't really the Fed's job until we saw this phenomenon take place during the Greenspan years, and it's continued all the way up through current Fed chairman. Well, with Bitcoin, you have what's called really the Michael Saylor put, or let's call it the Larry Fink put. So every time you see some price weakness, these guys come in with huge orders. So you've got huge orders coming in on any price weakness. And that's the floor. Like the floor is established. It's not going to go beneath that floor because these bids are stacked up to buy the Bitcoin. And because they know now the jig is up. I mean, I would say this year now, finally, the major global institutional money understands now without any equivocation that Bitcoin is going to swallow the Forex market the same way the software industry swallowed the global industrial base, right? Software ate the world, right? Everything runs on software, and that started in the 1970s. And then Microsoft and Apple went public in the early 1980s. I was a stockbroker at the time, and the information age and software ate the world. And you see those great photos of, here's the 30 things you used to carry around with you, which are now on your phone, right? So it's like it totally transformed everything. Well, Bitcoin is eating the Forex market. It's eating the global kind of investment, store of value and investment market, which is approximately $400 trillion in size. So even at $1.5 trillion in market cap, it still has a huge runway ahead of it. And once people who manage money professionally understand that, they have to start buying it. It's their fiduciary responsibility to get exposure to this asset class. If they do not, they would be subject to really anger from their clients who would say, you're violating your fiduciary responsibility because we have no Bitcoin in the account and you've deprived us of that performance. So now you've got that all kicking in.
Also, I want to bring up the fact that, like I said, Paul Tudor Jones noted that nobody was shaken out, right? These Bitcoiners, whoever they are, they were just kept holding. And that's really important, that the mindset of the Bitcoin community is ready for global dominance. Like we have the best perfect money. When you think of the control that the price signal in fiat financial markets has over the psychology and the mindset of the people, that they can put greed or fear. They turn it on. They just swap, a button. They press a button and they lower interest rates, send euphoria and greed throughout the entire economy. Then they put fear. They raise interest rates really fast in order to stoke fear into the population, or they crash the markets during, remember when Hank Paulson was looking for a $700 billion TARP, that they pulled the number out of thin air, and Congress said no, And then the markets crashed. And then they said yes the following day because a whole bunch of people called them in fear of like, oh my God, my portfolio is going down. The same thing happened with the bond vigilantes. Like they crashed the bond market back in '92, and they forced Bill Clinton down from some of his acts. But Bitcoiners, like, because it's not a price that they're looking at, but the amount of sats that they hold, the percentage of the 21 million Bitcoin that they hold, it's a different way, like a different mindset, a different way of being, that we're more sovereign and independent in general. Obviously, now with the ETFs and a new wave of every cycle brings in a new wave of participants, and every new set of participants in the first bull market will tend to obviously be more more fiat mindset. They might be more fear and greed driven. So at the margin there, you're going to see more volatility. A lot of those newbies, for example, did sell. There was a huge sell-off by the minnows in January when the Bitcoin ETFs were launched, and the mainstream media said, oh, it was kind of a dud, and they all sold. So, bizarrely, and then you could see, because of on-chain analysis, you could see it was smaller holders that were selling. But presumably those were newbies who had gotten in, and they were just, maybe they got in at 19,000 and they were happy with 40,000. They're like, well, I doubled my money and my fiat money, and I'm happy. But what they hadn't yet understood the new paradigm that you want as many sats as possible rather than as a dollar value.
People on Wall Street, people in finance can push a button and make markets go up, markets go down.
Yeah.
And this is probably not well understood. That they call it program trading. That's a common phrase, but program trading is just really market manipulation, or high frequency trading is another form of market manipulation. And it all started in 1987. In 1987, there was a massive crash, a 22% intraday crash of the stock market in the United States. And the lessons learned from that crash is that, my God, that accidental crash, and what happened was the computers in New York and the computers in Chicago got into contentious doom loop, if you will, and they were feeding off each other, and you had this crash, this epic crash. And what the lesson learned was, that was an accident, but what if we could do that on purpose? If we can make markets drop 20% or rise 20% by this computer manipulation and information manipulation, it gives us incredible power. And since that time, and by the way, in the 1997 crash, it was the first time in history that the federal government stepped in and started buying S&P futures contracts to bail out the stock market. So price discovery ended on October, the day after, the Monday after the Friday of the stock market crash. Pippa Malmgren, who's a market observer and writes a lot, has done some work on this and talks a lot about how the S&P futures contracts purchased by the federal government kind of ended free markets in America. So a lot of people say, capitalism sucks. Well, we don't have capitalism. We have something different. And anyway, so the markets are manipulated in this way. The long-term trend, you can't stop it. Like, the markets are on a longer-term trend. They will kind of seek out value. As Warren Buffett says, I believe the phrase is, in the short term, markets are a voting machine. In the long term, markets are a weighing machine. But in the interim, you get the volatility, and that volatility, in 90% of it is synthetic. It's created by players on Wall Street who are capturing the gains for themselves. And that money, of course, goes into lobbying Washington to pass more laws to make it easier to manipulate the stock market. So this is the doom loop we're in right now, while financiers that have completely undermined the economy. And the result is incredible dysfunction and dislocation and wealth concentration, the dangerous wealth concentration that we're experiencing now.
So there's Max Keiser with his analysis on Bitcoin, offering insights into its potential trajectory and impact on the financial world. With his bullish outlook on Bitcoin's price and its inevitable dominance, Keiser's perspective encourages investors to consider the long-term potential of the digital asset. As Bitcoin continues to make new highs, it's clear that the cryptocurrency market is evolving rapidly, presenting both opportunities and challenges for those willing to embrace its potential. Before we go, a quick reminder for those who are keen on staying updated in the fast-paced world of crypto and Bitcoin, consider subscribing to our daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top on-chain analysis trusted by over 50,000 subscribers for insightful crypto investment information. Click the first link in the description to join our community and elevate your crypto investment knowledge today. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.